Good morning, everybody. It is Thursday. It is 3:30 in the morning, Eastern Standard Time. A bit earlier than usual, only because having a having a Tim day, first day of the year. I've not gone to the gym. Got a lot of things going on in my head. But anyway, it's not about me. It's about you. So yesterday, dropped down to 39.7690. As I was showing there that we were looking for 39.80.
It was not what I wanted!
Anyway, it's what we got. So a lower close, fractionally lower, minus 6 points on the day. Did have a gap up. That's the band-aid on the bullet wound, but still closing down red 4 days in a row. We are, for the month of February, that move that's been from 41.95 down to 39.76, 5.21%. Show you here in a second what we're talking about with that. The move down from here on February 8th, February 14th, Valentine's Day, where we had that pop on CPI, is down 4.4% over those past, call it 8 days. So, yes, it looks very, very, very much as if we are placing a bottom. And again,
Just when I thought I was out, they pulled me back in.
sitting in this now rolled twice, what was the 39.95 4000s on Tuesday and was the 39.90 4000s yesterday, has been rolled to 39.85 4000 for today. And expecting that we are going to be getting a green close, as when I threw this out here February 6th, looking for that 5% move down there, 39.8567, and it's exactly what we wound up hitting. We've had no catalysts at all, no speakers, no bad news, no nothing. We did break down below 1% from the open, or from the prior close, 3 days in a row. We should have gotten that 1% bounce, although there has been days that have been skipped. So today, again, just looking at data and data alone, I am going to be looking for that 40-30-96 where we breach above plus 1% from yesterday's close, and that should be sufficient, but it is not a fantastic thing, as this has been occurring over the past few weeks. After we do that, we then get followed up with a minus 1% visit the very next day, which brings me to the put calls for Friday. And we're at risk of a pretty hefty sell-off on Friday. So there's nothing out here that's out of the ordinary when it comes down to the put side. Not seeing anything out of the ordinary. There are some calls that are being bought for hedges. Not much, because everything's cheap. Not seeing anything on the SPX whatsoever. Not seeing anything on the ES whatsoever. But looking at our pattern down, we are looking at that ABC, and we are inside the window here of where we should be looking for a bottom, but we're still at risk of that 39.50, which was what I had originally spoken about looking for when we were up at 41.95 at the very beginning of the month. So we are at risk. We are also at risk being that the full moon pattern is still in play, and how these full moons have very strongly coincided with major bottoms as well as with our major tops. We don't have another full moon coming until March 7th. So possibly a very dead cat bounce, get us for a green week to get the week out of the way, back up above 40.50, possibly even fill the gap that we're looking at. Hang on. Oh, I'll bring you to the charts here. Apologize. I know it's your morning. Don't want to waste your time. This being yesterday and focusing on yesterday alone, that October December lows line is up here, up above 4,000 with the gap up that we currently have plus 23 points on the ES. We will be opening up above that line. What the bulls need is the bulls need to hold that 4017 area. And having hit this area down here,
It was not what I wanted!
so the VIX, we've got those gaps to be filled. And that is the one major thing that the bulls have to their advantage right now is that the VIX has these gaps to be filled. They are a lot easier to fill rather than having the SPX go and fill upside gaps. So we are looking at that as a very strong potential. However, coming back to where my screenshots were, CPC closed at the highs yesterday, and I'll bring you over here to show you what we're talking about with the put call ratio. We're up here at 113. Now, once you get up at that 115, 120 level, you're getting a little bit too bearish, so we're pretty damn close to it right now. But over here on the equities, on the put call ratio, still not very aggressive as it was already coming off a very euphoric bullish view, being way down here in the low 50s, below 50. So it's just getting back to a little bit of normality over here on the equity side. But again, looking here at the NDX from a daily point of view, you are into oversold, which is something to be worried about as far as a bounce coming. You do have these gaps that need to be filled right up here from earlier this week and late last week on the weekend. But again, that major worry is that true strength index coming having rolled over, which is not going to be a fantastic thing to be looking at. Here is the SPX weekly, and again, we're looking here and we've got 3 red weeks in a row. We had 4 here in December. You had 3 here on the major down move in August after having 3. Somewhat suspecting that we're going to get a green week here, only so that we can avoid having 3 in a row and then have another move to the downside. That's the suspect, which would be closing above 40.52, which right now, having been as oversold as we are, almost as oversold as we are when we were heading into that December low, it is a very decent possibility. However, you are at risk. So, being that we are at risk, there are some things to consider as we're heading in here into this end of the week with Thursday and Friday. Our weekly candle is up here at 40.52. We all know that 40.79, we're going to fill the gap from the weekend. Showing you on that other chart where we are, where the bulls must hold that 40.17, that's what we're looking at right here. This 40.17 area has to get held. You've got your October, December lows line up at around 4,000. This is an example here to show you how we're on a 5-minute chart, and that line is completely inapplicable because it's down here at 39.80. When you go onto a 1-minute chart and you have your trend lines drawn correctly, they're right in line. So up above 4,000 for that October, December low line. Looking up here, a 50 retracement back to the February high would bring us around 40.86. So that right now is about the best case scenario that I'm looking forward to as we head into a forced bounce before we head into March 7th for the next full moon. So, yeah, a lot to be worried about, a lot to be concerned about. And yes, to answer your questions, yes, Lunar, yes, I expect the same thing to take place when Glacier lists. Yes, 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 you don't need to private message me anymore. Yes, I expect the same thing to happen when Glacier lists. So here we are. That's what we're doing. Here we are with the VIX. VIX, you're going to need a little bit of Scarface action.
You want to play games? Okay. I'll play with you. Come on. Okay. Do you want to play rough? Okay. Uno. Say hello to my little friend! Okay. You want to play rough? Okay. Yeah. Okay, Yolanda!
get that VIX down there into 20. You can get that bounce back over here up around 40.52, 40.65, 40.70, and then we can start to recover and possibly be looking for that next downside move as we head into the end of the month and the beginning of March. Have a fantastic morning. I will see you guys in the chat room.